Thank you very much, Minds and Money, for organizing this event with some lithium development companies and Rodney Hooper and me at Minds and Money. I don't know if there's our fifth or sixth quarterly event where we're summarizing our views and introducing some interesting companies that are going to be needed for the significant shortage of lithium supply forecast over the next decade or longer. So I'm Howard Klein from RK Equity, and we've been in business 20 years, but about 12 or 13 in the last 12 or 13, we focused almost exclusively on lithium battery material developers. This is a list of our clients over that period, which include a number of successes from very early stages, including Western Lithium and Lithium Americas and Piedmont Lithium, which we have represented from some 10 or 20 million market cap to billion or multiple billions. And both Winsome Resources and Luna Lithium, which we're going to be speaking about today, are clients of ours from similar early stages as those two that I just referenced. This is just a quick disclaimer. Nothing that you're hearing today is financial advice. We're not financial advisors, but we do assist companies in raising their profile. So I'm just going to go through a few slides here before Rodney then introduces some of his industry thoughts before we get into Winsome and Luna's presentations. I started a newsletter about 5 or 6 years ago called the Lithium Ion Bull. Rodney and I then turned that into a podcast, motivated by a podcast that Emily had helped co-host. And during COVID, we launched a YouTube channel called Rockstock Channel, and I'm just highlighting a number of thumbnails from those videos. So in January of 2021, Rodney wrote a note that 2021 would be lithium's year, and prices were at a bottom. Lithium prices were, chemical prices were about 5,000, spodumene prices about $400. And in June, prices had started to rise, but stocks had been drifting lower. So we introduced this concept of lithium higher love, taking a page from Steve Winwood, because if you look at the past cycle, you see that lithium prices kind of go up, they retrace, and then they hit higher highs. So we suggested and introduced the concept of higher love in June of last year. And in that video, lithium prices were about $13,000 or $14,000, and Rodney said he didn't want to say inflammatory things, but he thought by the end of 2021, they might be $18,000 to $20,000 a ton. They ended up, I'm not exactly sure where they were in December, but more like $30,000 or $40,000 a ton. And then in January of this year, we said that it's lithium's year again, and as lithium equities were drifting down due to inflation fears, interest rate rises, and the like, we said in February that higher love would be here again, and lithium prices have risen now to around $70,000 a ton. Matt Fernley is another great analyst. I think Minds and Money has had him on. He wrote a note in December, how high can lithium prices go? And on the right-hand side here, he shows, we're going to have to ratchet down. All of the EV companies are not going to be able to meet their forecasts out there due to material constraints, in particular, lithium materials. Broadly, Minds and Money covers a lot of commodities. Lithium, people like to call it a specialty chemical, but the reality is it is perceived to be a commodity, and commodities and commodity equities are good inflation hedges. EV battery materials are largely commodities, therefore they present a win-win to play both the EV thematic and the commodities as an inflation hedge thematic. This is just a bullet point to suggest you should be in commodities, and lithium is a great place to be because it's going to be in a structural deficit as far as the eye can see. Demand so strong, supply can't keep up. I've taken some slides here from Piedmont Lithium, just shows lithium prices. This is 69,000 hydroxide, and spodumene prices are 4,600. But very recently, Allchem said that their June quarter, they're expecting $5,000 lithium prices. So we maintain a monthly scoreboard. This is the quarterly scoreboard. This is growing very big. There are lots and lots of lithium developers, but what you can notice here in this column, 1 month and year to date, is just a sea of green. And many of these companies have attained 52-week or all-time higher love, as we kind of predicted in those earlier videos. Another slide from Piedmont, we're focusing both Winsome and Luna are North American opportunities. This is focused on hydroxide in the United States. These are to just demonstrate that all in the upper right here are all of the lithium required by various gigafactories announced in the United States. And then the supply is absolutely tiny. There's only about 15,000 tons produced in America today. And I think by 2030, that's expected to be 500,000 tons. So whereas chip shortage have dominated the headlines in the past year, battery cell shortages and battery price rises are here due to shortages of prices of raw materials, in particular lithium. Robust M&A and partnering activity will accelerate with higher prices paid for quality assets, and the M&A will include new investors with deeper pockets. So again, taking this from Piedmont, they talk about industry consolidation. Piedmont invested in Sayona Mining, which is relevant for Winsome. It's really put Quebec on the map again with the restart of North American lithium. And Piedmont made a few other investments. In the middle here, you see China has bought into a lot of assets in Argentina, in Africa, a few others. But also there's been a lot of new entrants to the industry. So Rio Tinto bought Rincon, West Farmers bought Kidman, Sibanye-Stillwater is in Ioneer, and various others. So we're expecting to see more new investors come, and bigger ones, including potentially auto OEMs and battery companies. We interviewed Ken Rinsden in September of last year, and he has an exchange, and the auctions that he was getting were demonstrating significantly higher prices at the time. He was recently quoted last week. He's always quotable that the average car EV maker is hitting the panic button. Car makers are asleep at the wheel, and they're going to have to pay through the nose to access raw materials. I put out a poll last night, just was curious, like there has been a lithium melt up. What was the cause of that? And 56% of the people said that there was the executive order that Biden announced last week. In my opinion, I'm more in the camp of the Allchem price guidance, which was for 35,000 ton carbonate and 5,000 per ton spodumene in the in the second half of this year. To the right here, I just summarize on our scoreboard the development companies, how they're broken down between rock, brine, and clay. You see rock is 17 billion market value. Salar and DLE brines are 11,000. And I'm just comparing. Luna here is not yet public, so we don't know what the valuation is, but you should think of Luna, I think, in the context of what has occurred with Vulcan, Standard, and Lake over a couple of year period. And likewise, Winsome is currently a 53 million market cap. And this is a universe of comms from Pilbara to AVZ, Liontown, Core, Sigma, Piedmont, Sayona, and Firefinch. Hopefully that could be the trajectory over the next few years. So just a quick advertisement for Rockstock channel and asking you, are you one of the 53,000 viewers of our latest video, or one of the 1,000 new subscribers to Rockstock channel? As I said just before, I do think that big companies are going to have to buy into lithium mines, and the biggest of the big would be if Tesla buys Albemarle. It's game over. Have a check of Rockstock channel, and please subscribe for further color. And with that, I'll turn it over to Rodney Hooper, my partner.
Stop sharing, please, Howard.
I did.
It's saying like, okay.
Yeah, okay, go ahead. I did now.
So I'm just going to have a quick review of a market update, and there's some news that came out this morning, but this is mostly applicable, still going through for some timeline. So what we continue to see, and we don't disagree with analyst forecasts that show lithium demand on an installed basis and total supply is balanced in the near term. But the problem is, you have to ask yourself if this equation represents what drives prices for battery lithium chemicals, and if not, what does. And what we believe is the most accurate and most correlated to market prices is lithium demand based on battery-grade lithium demand based on cathode and electrolyte production, less supply from recycling. So the logic is simple. If it goes into a cathode, it has to come from somewhere, and that's either supply or from inventory. And if you look at what's happened during COVID, the logistical challenges, new battery cell factories coming online with higher production scrappage, and EV market recalls, what we see is the differential between battery, cathode, and electrolyte demand and actual installed or even sold gigawatt hours is substantial. So we think that analysts are missing a trick in that differential. And if you look even further, you'll see that incumbents started 2022 with effectively zero working inventory of battery-grade material, which means that they not only need to meet running demand now, but they also need to produce excess supply to try and restock inventories. And what is it that investors should be looking at? It should be only battery qualified lithium material that matters, not aggregate demand. And that really is the key challenge, is whether the market can keep up with those demands. If we look at the battery grade market, in our opinion, it's been in a structural deficit since late 2020, and we've seen a drawdown of inventory since then. And if you look at the market consensus of EV sales forecasts going forward, there's no end in sight for a supply shortfall. Albemarle's latest presentation at 1.5 million tons lithium carbonate equivalent is 2025 demand. And if that's correct, we believe the battery grade shortfall in that year will be significant, something around the 200,000 ton region. What are we seeing in 2022? If you set aside this morning's announcement from MinRes, we had Albemarle as up 30% for lithium chemicals for the year. They have now put out their own forecast. That 30% is now at the top of their range, which means there's a risk of a shortfall on our supply numbers. You look at Pilbara Minerals, average quarterly production forecast is now 90,000 tons. That's the mid-range of the company. If you look at the chart at the bottom, that really isn't a material increase over what we've seen. And then Allchem, the Olaroz sales were down 24% year on year in the first half, given that they sold down inventory, and their production growth was marginal at 6%. Today's announcement coming out of MinRes for Albemarle, etc., will make a difference. But again, you need to look through those numbers to see what that translates into final lithium chemical and qualified material for the year. Why is it that battery grade material is all that matters? If you look at aggregate net supply and demand, it looks like the market is largely in balance until 2025. But if you drill down into battery grade and qualified, you see the number is very different. We have close to 100,000 tons shortfall for this year, and slightly for next year, and then back to 100,000 in 2024, and then closer to 200,000 in 2025. So it really is battery grade material that investors need to focus on. So just to summarize, we see lithium supply growth will exceed, aggregate supply growth will exceed battery grade supply growth, particularly for hydroxide. Optically, it looks like aggregate supply is mostly balanced until 2025, but battery grade supply will be in structural deficit until a significant amount of new supply is permitted, funded, constructed, and qualified, and one cannot underestimate those timelines. A red flag for us is in January 22, EV sales were only 650,000 units, yet the spot price went parabolic. And that's a red flag for us because you are already sort of redlining on supply and you still need to build up inventories and restock. Another example of a timeline to consider, Rincon bought by Rios. They now are talking about a 2-year refinement of the DLE process. Then you've got 3 years of construction and ramping of commercial production and so on. We think at best, late 2020s is when the first qualified material will come out of that project. We think the fastest route to market is spodumene to spare Chinese conversion capacity to increase supply. And as we've now seen from this morning, MinRes and Albemarle agree with that. That's the route that they're going. We shall see how much that adds to supply this year, but we think it'll have a limited impact. The other route to supply is late-stage conventional brines. And we think that there'll be a lot of M&A and JV activity for assets that can produce by 2025. On that thinking, as a company, RK Equity believes 2022 is the year that OEM and cell companies will be forced into major M&A and upstream deals in order to secure supply, because we think there's going to be a material shortfall in those unprepared, and that's essentially tying in with what Ken Brinson has said recently. So we think that there's still deals to be done this year and likely beyond. So that's the overall view. We see structural deficit not changing, and prices may level off, but they're still at very high levels. And the MinRes and Albemarle announcement this morning is really just going to feed its way into a very, very short market already. And we still see lots to come and lots of development. Thanks. Howard, you there?
Are you there, Howard?
Yes, I'm here. I'm sorry. I forgot I need to transition from Rodney to Chris Evans, who I have known for a few years. He took me around the Altura site, now owned by Pilbara, I think in 2018, when he was the, I guess, chief operating officer and overseeing that company from exploration into construction and into production before he left to work in Africa as the MD of what is now Firefinch, which was on my earlier slides. Now, I don't know, 700 or 800 million market cap company. But he reached out in the middle of last year saying, we're going to take over a couple of early stage properties in Quebec and develop a North American supply chain from hard rock. As Rodney just described, hard rock is the fastest path in the short term, especially if you can do a dense media separation only process, which we were attracted to when Chris told us that's what he's planning at Winsome. So with that, Chris, take it away. And now that you've raised some money, tell us about your exciting drill plan and how that's going to come up. Take care.
Thank you, Howard, for the kind introduction. It seems my was one of my biggest achievements at Altura, is showing people around the mine, because I also did that for Emily back in about 2016 or 17. And thanks to Mines and Money for a great conference. As a testament to the conference itself, I've presented numerous times today to investors. So I'll just share my screen now. Okay. So Winsome Resources, as Howard said, we formed last year and we listed on the ASX on the 30th of November 2021 to what I think was a successful IPO, and we've been reasonably successful since then. And I just got back from Canada and spent 5 weeks there setting up our drill program that Howard referred to, and meeting local officials, regulatory authorities, contractors, and other lithium colleagues who are listed or have other assets in Canada. And I think part of the reason of the success thus far of Winsome, and why we have quite a bit further to go, it's almost a trifecta of factors that some of them by chance, but they've all come together to lead to this success. And the three things that I refer to in this trifecta is the fact that we're focused on lithium, and that's sort of a given. Anyone doing that at the moment is going to be successful in this market, I think. But the second one is that we're focused in Canada, and in particular Quebec at the moment, which is a fantastic jurisdiction in which to be establishing any mining project, but particularly a lithium project. And the third thing that makes the trifecta is that we're actually listed on the ASX. So we've got a great commodity, we've got a great location, but we enjoy the support, the fantastic support that the ASX has offered us. And by that, I refer to our listing, where we aim to raise between $12 and $18 million, and we ended up getting offered over $80 million in the IPO. That was a little bit unfortunate for investors who either missed out or got cut back for the most part, but good for us as a company because it showed support, and it showed great aftermarket support once we were listed. And we listed at 20 cents, and we're now sitting today somewhere around 51 cents with a market cap of about $75 million. I'm going to jump ahead to our portfolio overview. So we listed with 3 assets in the James Bay region of Quebec, and you can see the 3 northern orange stars there. So there's Canset, Adina, and Cermak. And since we listed, we've acquired the Decel project that you can see to the south. Now, Canset, Adina, and Cermak are all about a year apart from each other in terms of exploration. Canset's the most advanced, and it's previously had about 5,000 meters of diamond drilling done on it. There is a defined mineralized ore body there, and it's outcropping on the surface. It's fantastic grades. One particular intersection is 17 meters at 3.7% lithium oxide, which really is world class. And the other thing about Canset is that it's very large spodumene crystals. I'm going to jump ahead to this slide, although I may go back. And on the left-hand picture, this is a picture I took myself in October last year of a spodumene crystal in the outcropping pegmatite at Canset. And the importance of the coarse-grained spodumene is that it makes it very amenable to dense media separation. And we've had some preliminary test work done last year, and we've got some ongoing now, just to show how amenable it is. And the test work last year did some heavy liquid separation, which is the precursor and the indicator for DMS, and came up straight away unoptimized test work with a 6% concentrate. And that's really important because also with a great recovery, I should add, in excess of 60%, again, just on very rough test work. So we're refining that at the moment. But what that means, if we can aim for a DMS only operation, it means lower capex with no flotation. It means less permitting because we don't need a tailings dam. And inevitably, it then means quicker to market. and it doesn't preclude us from then putting flotation in later on if we think the recoveries justify it and we can get more product out. So the metallurgical test work we've got going on at the moment is a very important part of our project development over the coming years. I'm going to concentrate on CanSet mostly, given the time we have here. As Howard said, we're doing some drilling at the moment. We're very fortunate to be able to get a drill rig, and that's the rig in the bottom right-hand corner. Obviously, I took that photo myself about a week ago. Drilling assets are very hard to find in Quebec at the moment, and our country manager, Carl, managed to find that rig, and it arrived about 2 weeks ago on site. We're doing a relatively modest program of 2,000 metres, but when you add that to the 5,000 that's already been done, that's a very good base for the establishment of a resource at CanSet. And if you look at the, well, perhaps the top right, the beige blobs are a leapfrog model of the mineralised ore body we already know about from previous drilling. And obviously those lines are the drill holes, including the new ones. So you can see there's a considerable amount of drilling there. And then if I refer you to the left-hand map, the central area is the existing area that's been drilled with the 59 odd holes for the 5,000 metres. We're doing 20 holes, roughly 100 metres each in this campaign, 10 of them in that existing area to increase our knowledge of that ore body. But then we're also targeting to the east and west in those red circled areas you can see. A magnetic survey we've had done over the property indicates there's anomalies out there that are similar to those that exist over the known mineralisation in the centre. So we're drilling those, hoping to find pegmatite that's mineralised. If we do, then that'll extend our strike length to well over 800 metres. So we're just over halfway through our drill program now. We've drilled that central zone, the infill drilling. We've now got the rig out on those outlying areas looking for extensions. The first samples should be at the lab in the next day or two. And then, like every other contractor, the labs are pretty busy in Quebec, but they've indicated it's about 4 weeks for results. So in 4 weeks, we should start getting our results in from this drilling campaign. We put out an announcement last week that there's visible spodumene in our very first drill hole, which is exciting. Of course, that doesn't indicate the extent of lithium mineralisation, but it's a very good indicator that there's going to be good news. We've also got a gravity survey occurring as we speak, and that'll be finished next week. And the gravity survey seems to show up great anomalies where there's pegmatites. And when we overlay the gravity, the magnetic survey, and the LiDAR survey, which indicates detailed topography, we will generate targets over the rest of our CanSet project. And I'm just jumping back on the right-hand side, you can see the 390 claims we have in total at CanSet, and we've really only explored and drilled about 15 of them in the centre there, which is our previous drilling. So there's a lot of good news to come. Again, in about 4 weeks, we'll have this target generation. By then the snow will have melted. We'll have teams on the ground who will investigate the targets to then generate drilling targets for later in the summer and towards the end of the year. And really we're just heading towards a maiden resource at CanSet within the next 12 months, potentially quicker depending on how drilling goes. Another great thing, I don't know how we're doing for time, Howard, but I think another great thing about Winsome is that there's quite a lot of lithium experience in the company. I, as Howard said, have been involved in lithium for about 7 years, since Chief Operating Officer at Altura, then Firefinch. Dr. Qingtao Zheng is also heavily involved in lithium. He has a lot of contacts in China, and he sold spodumene concentrate from Galaxy, from Altura, and from Pilbara Minerals into China. Justin Boylston has led a number of small cap exploration companies to success. And then Carl Martin is our general manager in Canada. He runs the operation, and he worked for a company called BBA, which is a geological consulting company, and actually did reviews of Moblan, Namaska, and North American lithium while he was there. So to find a geologist and a country manager who's familiar with lithium is was an incredible piece of luck. So it really means we've got the credentials to take this forward. And I think that timetable summarises what I just described. We're going towards a maiden resource within 12 months at CanSet, and we'll have a scoping study with that. And I think the other thing about Canada, the fact that we've got our current assets there, there's still a lot of opportunities in Canada for lithium. If I look in a jurisdiction like Australia, it's really hot for lithium, and it's hard to find what investors might call a good value opportunity. But Canada has still got some of those available, I think. And we stated in our IPO that was one of our objectives, and it certainly remains one. In addition to the exploration I just described, we're looking for further opportunities.
Well, great.
Me, Howard, if that.
Okay, that was great, Chris. And we'll come back with some Q&A after we hear from Emily Hersh. So Emily, I met, I think, 5 years ago at a Benchmark Minerals conference. And then, as you said, you reminded me, Chris, I was like on the heels of Emily about a week or two later on that site visit. And I remember listening to what she called the best, the worst, the first lithium podcast, which was about 1 year before we decided, Rodney and me, to launch the second, but not the second best, Lithium Ion Rocks podcast. Anyhow, since then, during COVID, she launched a second podcast called Minerals Manhattan Project, which was focused on supply, ex-China in particular, from North America. And having moved from Argentina, where she lived for 10 years, came to America and is now putting words into actions. Now, as a commentator, former commentator, and still a commentary, but very much, Emily is now CEO of a private company, Luna Lithium, that raised a little bit of money and to put together and get ready to drill. And she tweeted a great picture last week about that. So excited to hear why or about Luna, and see Emily putting her words into actions and coming up with hopefully a nice resource and potential supplier in the US, which is not too far from Albemarle's Silver Peak. The only producing asset in America is Albemarle's Silver Peak, and your project, Luna, is called Pilot Peak. So from Silver Peak to Pilot Peak, take it away, Emily.
Here we go. Thank you, Howard. Chris, you're a tough act to follow, but I'll do what I can here. And I'm going to just walk everybody a little bit through Luna Lithium as a project, and I'm going to have to switch to an older presentation that has a bit more about Nevada as a jurisdiction and Nevada as a lithium jurisdiction or an emerging lithium jurisdiction in just a minute. So Luna Lithium is a private company that's developing the Pilot Peak brine project located in central Nevada. Luna is a company that I've put together over the last 18 months around a very interesting brine target in central Nevada, in sort of the right place at the right time in the lithium boom, where both prices and policy are coming together to really support moving towards greater US production of lithium chemicals. This is sort of a picture of me out on the playa about 6 months ago. We have put together over the last year a program that involved 2 geophysical surveys to define our brine targets, a seismic survey to take a look at the subsurface lithology and get an understanding of how and where to drill. We have gotten our initial drill permits in place, and we have, as of last week, a drill rig on site, roads built, 2 out of 5 drill pads constructed, and a drill in the ground that just got down to about 200 feet because we don't use meters in the United States as of yesterday. And so I want to sort of talk just a little bit about why I decided to essentially come back to the United States from Argentina and take the helm of an exploration company. And that's because I really had a front row seat to Argentina over the last decade, and a front row seat to watching Argentina develop into one of the leading lithium, not only one of the leading lithium producers on the planet, but also go from a one-trick pony with Livent to being the home of every single project that is shovel ready when it was time for the lithium price to boom, and when it was time for some of the bigger companies to move into the lithium space. And so one of the expressions that I've said over the last year is that the world's going shopping for ready to build lithium projects, and Argentina is the only jurisdiction that has projects that are ready to go. And so when I came across this project here in Nevada, which was introduced to me by Alex Grant, who's one of the princes of DLE, I think, as Howard says, it made sense to put together a team and put together an exploration focused and an exploration minded group around taking that from an idea into a reality. And so we've put together an excellent team of service providers, from Montgomery and Associates working with our hydrogeological work, to an excellent seismic and geophysical team, to EM Strategies, who's helped us move through our permitting process with a speed that I don't think anybody else working in Nevada would believe that we were able to do, to Premier Drilling, who has gotten out on site and is working closely with Montgomery to understand how to do brine hole sampling in a jurisdiction that it hasn't been done very much before. So this is a little bit of an overview of the Pilot Peak project. And one of the things that I like the most about this basin, or this brine target, is that most of the mining projects that I've looked at at least my experience, the only thing you aren't able to move is the mine. But with this project, we're actually located at the intersection of two federal highways. We have a power line running over the project, and we're located more or less at sea level, meaning that a lot of the DLE technologies that have a bit of a challenge working at altitude, or that are very energy intensive, this is a spot that's tailor-made to put those technologies into action. So as a project, you can kind of see that we're in the right neighborhood. We're right next door to Clayton Valley, and we're in the drainage basin of known lithium claystone deposits at the gravity low. And so when you have Ioneer located to the south, you've got American Lithium located to the east. We're in an area where basically you kick a rock and you find lithium contents of some kind of interesting value. And this is another of the parallels that I see between central Nevada today and Argentina about a decade ago, where the lithium anomalies are exciting and interesting, but a wave of exploration is going to be needed to do the science, to do the resource definition required to turn some of these interesting deposits into projects. So one of the things that we as a company work towards is having some of the highest environmental standards. And one of the reasons I like a brine deposit, if it's there and if it's workable, is that you don't have to dig a hole. And so understanding that you're able to work with minimal surface disturbance, and understanding that you're able to apply DLE technologies to have higher standards of environmental sustainability is really one of the benefits of this project, and one of the benefits of working in a brine environment. I've also taken more steps than most to understand the need to have a diverse group of people from day one in a project, working with more women, working with more communities, and more people who have a stakeholder rather than shareholder mindset in a project. And so this is just a little overview of our timeline of what we've accomplished so far and what we're looking to accomplish going forward. In the first half of last year, we were able to increase our land package and do 2 phases of geophysical surveys, as well as a seismic survey. And we have put together a 43101 compliant technical report as of this quarter and gotten a drill rig on site and are working towards drilling between 3 and 5 initial holes to work towards a measured and indicated resource. We believe that we will be on track to hopefully have some form of a public listing or public event within the next few months. And that will enable us to take the Gantt charts that sit behind brine development projects and compress them into a shorter timeline than most are able to achieve. And I'm kind of defined by looking at the lithium market by saying, no matter how ambitious we are about building new lithium supply or expanding existing lithium supply, we're in a market where there's exponential demand growth that's hitting linear supply growth. And there's going to be a point within the next, I would say 3 years, that the amount of lithium chemicals that's contracted simply doesn't exist. And at that point, we're going to see a cascade of some forms of defaults within lithium chemical supply contracts. And that's going to be what is an impetus behind the OEMs and some of these other players moving more into the supply chain and getting some of the deals going that Howard was talking about. So I'll just conclude by saying that sort of Central Nevada today should be viewed like Argentina in 2013 from a standpoint of exploration opportunities for lithium. And Central Nevada is home to the range of ecosystem builders that are necessary to push forward a United States lithium, not just lithium supply chain, but lithium chemical supply chain that goes from the ground into a battery and back into recycling. So thank everybody for the presentation, and I'm really looking forward to participating on a panel.
Awesome. Thank you, Emily. Make sure, Rodney, you're not on mute as we go through some Q&A. There are a few from the audience, so I'm just going to go through a couple of them and I'm going to answer them and not let you guys answer them. And then I'll go into the ones that I like, and then we can put that up. So what's Howard and Rodney's view on the opportunities in lithium recycling? We think that we need a lot more virgin lithium units, early stage mining, projects. Recycling is maybe going to be 10 or 15% of the supply, in 2030 or 2035 and beyond. So there are opportunities to recycling, and JB Straubel and Redwood Materials and Li-Cycle is a public way to play that, and Neo Metals is another public way to play that. But there's a lot of recyclers looking for not a lot of product. So we do wonder on the economics of just recycling on its own. So that's our view there. What impact has Ukraine had on lithium supply and demand? The answer is not really any at all, but it has exacerbated attention to the need for, just as COVID has accelerated from a climate change perspective and supply chain perspective, the need to have localized, secure, sustainable supply. The Russia invasion in particular for like nickel and titanium has further exacerbated that need for localized, secure supply, not reliant on questionable countries. So, and all for national security purposes. So the Biden administration's Defense Production Act announced last week, and the momentum from Congress and other actions has definitely accelerated since the Russia invasion of Ukraine. Third question, can we expect to see increased involvement from majors like Rio Tinto, Anglo, BHP, et cetera? If so, how? Absolutely, yes. Rio and Rincon is one example of that. Rio is probably the most advanced in their thinking of that. I've often compared Quebec, where Rio Tinto has a very substantial aluminum business, to what Rio could do in Quebec in lithium. There's, for all the reasons that one is in aluminum, low-cost hydro and clean aluminum, et cetera. I expect that Quebec will evolve and Rio could take a leading position in that, and they might, having bought Rincon in Argentina, which is a DLE brine. I speculate, I've said this a few times, that they could buy Livent to get access to their brine in Argentina and their technical expertise, at the same time have optionality on Livent's Nemaska asset in Quebec. Will we see Anglo BHP? I don't know. BHP is in nickel. I haven't heard or seen Anglo, but you've seen Sibanye Stillwater come into Keliber in Scandinavia and also into Ioneer. So Sibanye, I do expect miners to get into the chemical space. I also expect oil companies to do so, as well as battery and auto companies. So the questions, the last question that was asked from the audience, and I'll ask potentially a few of my own, but one that I'll open up for the group is, are the US and Australian governments doing enough to support lithium mining exploration? I'd throw in there Canada also. So why don't you, Emily and Chris, comment on that?
The United States is a very interesting place to be working in the lithium space, because you have on one side the federal government putting out very pro critical minerals supply chain legislation. But then on the other hand, you have extremely underfunded, under-resourced groups of people whose job it is to permit, right? So out here in the state of Nevada, for every Department of Energy program, every federally announced goal towards having a independent supply chain, you still have the same 1 or 2 people in these rural offices whose job it is to visit these projects and do this paperwork, which is a major stumbling block or a major obstacle to moving any faster than the process seems to work. And then on top of that, there's still a bit of a disconnect between the fact that things that are made out of metal come from a mine in the first place. So there's a desire to get away from a China-dominated supply chain and move towards electrification, but think that recycling is going to solve that problem without mining, which is a disconnect and an ongoing disconnect. And then on top of that, in the United States, another challenge is that the conversation related to mining in the United States from a lobbying standpoint and from an organizational standpoint is still very dominated by coal and gold. So I think that we're moving in a good direction, and especially evidenced by the Biden executive order that's followed a number of Trump executive orders. So at least you can say, right, the 2 major sports teams in American politics at least agree that we need to achieve certain goals, but we're still behind in having metrics-based goals that the United States will achieve and working to remove the bottlenecks, especially from a permitting standpoint, to allow that to actually become a reality.
Excellent answer, Emily. Chris, could you comment on, I mean, the guy that asked, or the person asked Australia, but I think Canada is relevant as well, and there's a lot of support through flow-through shares, et cetera. So what are your thoughts on Australian government and Canadian government?
The Australian government, in terms of facilitating lithium and other critical battery materials, it's probably like its approach to renewable energy. It's a little bit behind the 8 ball, I'd suggest. I mean, it's a great jurisdiction in which to mine, but there are certainly no advantages or government initiatives to improve or to assist lithium mining, for example, above any other form of mining. And in fact, the budget surplus every year in Western Australia and the largest GST component comes from iron ore mining. So that's always the darling of the Australian government, iron ore. So I think Australia's got a lot of work to do there. the Canadian government is a long way ahead. It has proactively set the scene in terms of electric vehicle adoption that the Australian government has failed to do. It has banned, well, it intends to ban the sale of ICEs, internal combustion engines, by 2035. Each province has got its own mandates, which in many cases exceed that of the federal government. So Quebec, for example, has a 50% sale target by 2030 of EVs. And they also have great government rebates, both for brand new and the purchase of second-hand EVs. In Quebec, it's $8,000 for a new EV and $5,000 for a second-hand EV. So that sets the scene for mining in Quebec. And I mean, Quebec's a fantastic place to mine in general. We get 40% of our exploration expenditure returned to us in tax credits, flow through funding, as you described, Howard, that you can often raise money at a premium for a junior company, which is very useful. Our permitting, there's a very clear set of rules for permitting. We just got our drill permit within 3 weeks of application, for example. So I think for me, the Canadian government has set the scene by its aspirations for EV uptake to facilitate lithium and other critical battery materials mining, and its mining infrastructure in general just is very supportive.
Okay, great. I'm going to ask a question of Rodney, and it's about just the valuation of, like, how should we think about valuation of lithium equities? We have two companies in front of us here that are at early stages, but you know, Chris is about to drill, and he has a 50 million market cap. And in June of 2020, you know, Piedmont Lithium, which had kind of like an advanced, you know, project scoping study, major resource, was at a 50 million market cap, and they're now $1 billion. So valuations in the eye of the beholder, and Luna is not yet public. But just how do we think about producers, advanced developers, you know, near construction or near full, approaching being fully funded, things like Lake Resources, 2 billion market cap, you know, AVZ, you know, 2-3 billion market cap. How should we think about that, like at this point in the cycle, relative to where prices are, you know, the structural deficit you're seeing, you know, and the M&A that you're suggesting is necessary? How do we think about?
Look, that's a really interesting question, Howard, because, you know, we have a view, and looking at the supply-demand dynamics for battery grade, the question, I guess, that is being posed, and that's causing disparity between valuations, is how steep is the backwardation of lithium pricing going out? So we're at all-time highs. We're at 70, 75,000 or whatever it is, even near 100,000 at spot and 6,000 on spodumene. How steep is the backwardation? How long are those prices going to last? Because you're seeing a favoring of near-term producers on the expectation that they will capture some of these higher prices and then it will taper off. Now, I don't think one can expect prices to stay up here forever, but at the same time, I think probably the backwardation is a bit steep, and I think in order to vaguely keep up with demand, more marginal assets will be brought into production, so the cost curve and the pricing curve is going to change. So on a typical basis, when a company is still in development phase, people look at a price to NPV often, and then when it goes into production or closer to production, they look at an EV/EBITDA multiple. I think, you know, that's probably too narrow. You know, if you look at something like Winsome, Chris's project, if it's going to resemble something like Atlantic or what have you, where it's a DMS only and you can do low capex relative to market cap, then assuming all other things being equal, permitting, etc., that has a much higher probability because capex to market cap will be a much lower ratio. So the likelihood of getting into production is better. And then you look at, infrastructure again and handicapping. You look at Emily's, where it's located, what's available. It also starts to reduce, what commitments you need. So I think that, obviously, people are, I don't know how short-term their horizon is, but I think that the implied backwardation on some valuations is a bit steep. I think prices are going to remain robust for a longer period of time, so that early stage projects like the two we have on here are likely to have a higher chance of capturing those longer term decent prices, and there will be a big pull to par, or whatever you want to call it, as time goes on. What is your NPV? A lot of the models we have $1,000 spodumene, but it's trading at 6. So is 1,000 realistic on a 5-year view or an 8-year view? I think it's probably a bit low, but people seeing is believing, I guess.
And another, if I can just jump in for 1 second there, Rodney, of course, the other simple way of valuing is what are other people paying in the market at the moment. And I always look at what Sayona just paid for the Moblan project in Quebec. That's got a resource of 12 million tonnes at 1.4% lithium oxide. Of course, there's the ability to expand that. But to get that, they did 17,000 metres of drilling. We will have done 7,000 metres of drilling by next week towards a resource. And they paid equivalent on a full project basis of 200 million Australian dollars. I always
look, I mean, Chris, the biggest bang for buck is always the drill bit. And as soon as you put those numbers up, we've seen what it's done for Atlantic. We've seen what it's done for others. When you show an increase in a resource, Emily's got a drill going now. That's the first quantum leap. But I guess, I think where we're going to see longer term, material upside, there's always upside in the drill bit, but I think that as prices remain stubbornly higher than people think they're going to be, then there is time for new early stage projects to come online.
I'll weigh in, Rodney, as well, that as more and more people wake up to a reality that lithium shortages are real, and they're not some lofty, ambiguous problem that's going to happen in the future. I think projects that are early stage today that are capable of moving forward quickly will be better positioned to get real offtake agreements and real offtake tied to large equity financings from major lithium buyers, major car companies, than the same company would have been a few years ago.
And on that theme, and we know this firsthand, Emily, is some major OEMs are looking very upstream. So they're looking at early stage plays. So I would agree with you, if you believe that the infrastructure and the opportunity is there, we're going to see some early stage plays get funded or M&A, and I think that's going to also support the market. I think people will be surprised what early stage commitments companies will make in this year. I think this year is the do or die. I think there are a lot of OEMs who are going to come up short on supply, and they're going to do the exercise that you're talking about. If it can be done, if it can be permitted, if the infrastructure is there, we're going to see, I think, some aggressive plays.
Sounds great. We got to go now. Thank you very much, Chris, Emily, Rodney. Watch this space. It looks to be exciting the next kind of 6 to 9 months throughout the rest of the year. I want to see big names writing big and small checks for advanced full funding projects and early stage ones like this. So that's the key catalyst that we think will keep momentum going for these lithium equities alongside the continued high prices. So thank you, Andy and Minds and Money, for having us again, and look forward to doing it again next quarter.